Hello and good morning. Welcome to the Goodlord webinar. If we haven't met or you're new to our webinar series, my name is William Reeve. I'm the CEO of Goodlord and your host for today. For those of you who don't know Goodlord, we're a technology company that provides an award-winning online platform which significantly improves the renting process for agents, landlords and tenants, as well as helping agents decrease costs, increase revenue and improve the customer experience. We also help them ensure compliance. And we've been hearing a lot from our customers about how complying with changing legislation is extremely time consuming and a constant worry for their business. Here's a glimpse of some of the recent legislative changes affecting agents: how to rent guides, energy efficiency rules, gas safety regulations, mandatory HMO licensing, the GDPR regime, and even in the latest instalment as of last week, a government consultation about eliminating Section 21 notices. But the legislative elephant in today's room is the Tenant Fee Ban, coming in on the 1st of June, 1 month away exactly, 31 days from today. In fact, today, May 1st, is an exciting day for us at Goodlord, because as of this week, I can confirm that Goodlord is now officially Tenant Fee Ban ready. I will review a little later on what we've done to our platform for those who are interested. In the meantime, we have a full house for this webinar, and we want to thank all of you from around the UK who've sent us over 350 questions. We're also taking additional questions on Twitter. Just tweet at @SoGoodlord for your question using the hashtag #AskARLA. But without further ado, let's kick things off. To help understand the implications of the Tenant Fee Ban better, we're very lucky to be joined by David Cox, Chief Executive of ARLA Property Mark. David qualified as a barrister and has years of experience in the property industry. He became Chief Executive of ARLA Property Mark in 2014, and he's well known across the industry and lobbies on its behalf in Parliament. Remember, if you've got any additional questions, tweet us on @SoGoodlord, and we will do our very best to include them in today's webinar. I'm now going to just pass over to David to say a few words before kicking us off with the first set of questions. Morning, David.
Good morning, William. Good morning, ladies and gentlemen. Thank you for joining us on this webinar.
Do you want to just give us a little bit of background, David? What's the mood in the industry at the moment?
So we are, as you just said, exactly a month to the day away from the introduction of the tenant fees ban. I've been doing an awful lot of webinars and face-to-face events with agents over the last few months. I think agents are pretty much there now. They understand the kind of the overarching, it's some of the sort of nitty-gritty questions that we're getting now that today I'm hoping I will be able to answer them for all of your viewers.
Excellent. Well, look, that's what we're hoping. I want to just kick off, David, with just for those. I've got a handful of agents who are really just looking, I think, for the sort of brief introduction. They're just coming up to speed now. We've got, for example, Kamal Samwani at 99 Home, Wendy Curtis at Your Move Frank Farr, just looking for a brief intro or general information on the fee ban. How would you answer that in a couple of minutes for them?
So I think the key thing to think about with the tenant fees ban is all charges, absolutely everything, is banned to tenants from the 1st of June for new tenancies, unless they are specifically made permitted payments. So work on the principle that absolutely every penny a tenant pays is unlawful unless it is actively allowed by the legislation. So the things that are actively allowed, number one, the rent. And I think that really goes to show it's everything unless it has been specifically made allowable. So the first one that is allowed is obviously the rent. I'm sure everybody will be pleased to know that. Utility bills, so gas, electricity, water, council tax, broadband, TV licenses, all of those, all utilities are also permitted payments. Then we have a holding deposit capped at 1 week's rent, a security deposit capped at 5 weeks rent, or if the annual aggregate rent on the property is over £50,000, then it's capped at 6 weeks rent. You then have tenant default fees. There are now only 2 tenant default fees. One is rent arrears, and the second one is lost keys or other security devices. You can also charge for a variation, novation, or assignment of contract. That is effectively a change of sharer or a change in the contract that is requested by the tenant during the tenancy, not at the beginning, only during. And surrender of tenancy, if the tenant wishes to surrender their tenancy early. And the final one is Green Deal payments or other energy efficiency charges.
Okay, very helpful, thank you. And just, you mentioned there that it's for ASTs and of under £50,000 rent. A question from Samantha Hubbard at Beresford's. Does this also include non-Housing Act tenancies as well?
So no, the ban is actually quite narrow in what types of tenancies that are banned. So William, as you said, yes, it's assured short hold tenancies, ASTs, and licenses to occupy only. So any non-Housing Act tenancies, so Rent Act tenancies, Rent Agriculture Act tenancies, secure tenancies, they're all outside the scope of the ban, as are corporate lets. So if you're doing company lets, you're issuing a non-Housing Act tenancy to the company, so they're outside of the scope of the ban. You can continue charging fees on your company lets. The other one to think about as well is assured tenancies. So assured tenancy, the AST is a derivation of the assured tenancy, and I know most agents don't, but if you do let on assured tenancies, you can continue charging fees on those. Final point on ASTs, particularly for our central London colleagues, do remember that the threshold of an AST is an annual aggregate rent of £100,000. If the rent on the property is over £100,000, it is a non-Housing Act tenancy, and therefore you can continue to charge fees on those very high rent properties.
Okay, great. And just before we move on to the next section, David, do you want to just confirm how final this is? There's a question from James Bolton at Wilson's, who said, why didn't the government just cap fees at a fair limit, like £250? Is there any chance that that might still happen?
With the best will in the world, there was no chance that was ever going to happen, I'm afraid. It was something we argued for, and we in fact argued for a policy of splitting and spreading the fees over the first 6 months of the tenancy. But this was a policy that had cross-party support. Normally, when I'm engaging with Parliament and Westminster, you can usually play one side off against the other. But with an issue like this, and actually it's very similar with the issue with Section 21 as well, it was proposed by the Conservative Party, as is the ban of Section 21. Both tenant fees and Section 21 and the ban on Section 21 is supported by the Labour Party. The SNP in Scotland has already banned their version of Section 21 and banned tenant fees, and the Lib Dems are supportive. So it wasn't like I could play one side of the house off against the other on this issue and on the abolition of Section 21. All sides of the house are in agreement, at which point what we have been trying to do is mitigate the impact for agents. We were never going to be able to overturn it. It was just had too much support. I think to a certain extent, I've said it from the stage at ARLA conference in 2015, 16 and 17, that this was an inevitability. It was not something we were ever going to be able to overcome. But what we have tried to do over the last 3 years is mitigate the impact and explain to politicians and the government and the civil servant the impact of what this is going to do. And they have made quite a few concessions in what is now permitted payments.
Great. Okay, good. Thank you very much, David. I think I want to turn to the next set of questions here, which is really a bunch of questions around what's in and what's out. For example, I've got a question from David Rogers at Martin & Co, who asks, what are we supposed to do when a tenant locks themselves out and can't get in and insists we attend to let them in?
So a few things you can do on that one. That actually comes down to the default fees, which is lost keys and other security devices. So if a tenant has locked themselves out at 2 o'clock in the morning, for example, it was actually an argument that we made very strongly that is an agent going to get up at 2 o'clock in the morning, go to let a tenant in if they've locked themselves out, and not charge for it. So what the government has said is you'll be able to cover the cost of replacement keys. You'll be able to, although it's not explicit in the guidance, it's certainly our understanding that you will be able to charge if a locksmith is needed, if a lock needs to be changed, because it talks about keys and other security devices. Well, key is one part, the lock is the other security device. So I think you will be fine with that. And it says in exceptional circumstances, you will be able to charge £15 per hour for your time in this. Now, I would argue that 1.5, yes. I would argue that those sort of exceptional circumstances are coming out of hours. But you will be able to prove, you will need to be able to prove that it has cost you that sort of money. You will also need to prove it is an exceptional circumstance. So what I would not recommend is adding that £15 an hour to every time you get called, but only in very exceptional circumstances where the tenant has done something that has put them in a difficult, vulnerable situation, such as being locked out at 2 o'clock in the morning.
Yeah, okay, very good, thank you. What about questions from Claire Woodrow, Ashington Page and Kingsley, Sarah at Kings and Marsh, professional cleaning or inventories?
So inventories are definitely out. So if I just quickly run through sort of the main ones that are out. So no more admin fees, application fees, setup fees, contract negotiation fees, referencing fees, check-ins, check-outs, inventories, renewal fees, end of tenancy fees, Saturday move-in fees. Those are all out. Things like professional cleaning, technically that's actually been illegal since 1977 under the Unfair Contract Terms Act. So for a long time, you haven't been able to say the property must be professionally cleaned. I know it's been in a lot of tenancy agreements since that time, but I think the tenant fees ban is actually starting to highlight some of these industry norms that aren't actually lawful. So you can't say the property must be professionally cleaned at the end of the tenancy. All you can say is the property must be returned in the state that it was at the beginning of the tenancy. Yeah. If that is professionally cleaned, you can say which was professionally cleaned and be able to evidence it with a receipt. And therefore you can then expect the property back at a professionally clean standard. But you can't mandate that they use a professional cleaner because, for example, you might have a tenant who is a professional cleaner and can get the property up to a professional clean standard without needing to employ a third party to do it. Having said that, if you say it needs to be returned in the condition that it was, and it was professionally cleaned, here's the evidence to show it. If it's not, you can then at the end go and get it professionally cleaned and deduct the cost of that professional clean from the deposit. What you can't do, and what will be classed as a prohibited payment, is mandate that it is professionally cleaned by a third party company.
Yeah, okay. Thank you very much, very clear. What about, Josh Mitchell asks from Sugar House Properties, fees permissible for late payment of rent? Can you clarify how that works?
So I'll start with what you can't charge and then I'll move on to what you can. So for example, you can't charge for, I'm trying to think, £25 for sending a letter for late payment, charging tenants for phoning to chase late rent payments. All you can charge is interest on rent arrears. And that interest charge is calculated at 3% above the Bank of England's base rate from the date the rent falls due until the date it is paid. However, you can't levy that charge unless the tenant is at least 14 days in arrears. So if they're 10 days late paying the rent, you can't levy the interest charge. If they're 15 days late paying the rent, you can levy the interest charge and you can backdate it to when it fell due, which I hope everybody understands that one.
So they can't pay 13 days interest, but they can pay 14 or 15 days interest.
Exactly, absolutely. Now, what I would say is, these interest payments are pennies. So I think I did a calculation yesterday actually, and I think it works out at if a tenant is late with £500 arrears, you would only generate just over £18.70. I think it's exactly £18.74 in 12 months. So if they're a month late, you're talking maybe £1.50, something like that. So these interest payments, with the best will in the world, it's probably going to end up costing agents more to levy the charge than they will actually get in the interest payment. Having said that, make sure that is in your tenancy agreement so that you can levy the charge if they're massively late and it's actually worth levying it, but you're not going to get a great deal in terms of interest payment. What I would also say is make sure you check your tenancy agreement. Most tenancy agreements talk about 4% or 8% above the Bank of England's base rate. ARLA's previous tenancy talked about 4% above Barclays' base rate. So make sure you are looking at your tenancy agreement and you change that interest clause.
Yeah, okay, very good tip there, thank you. Question from Twitter from Amanda Mitchell. She asks, can you still charge a tenant for negligence, e.g. if they block a toilet?
Yes, that is actually a very good question, Amanda. So that is within what is known as the damages provisions within the Act. So what the Act says and what the guidance says is that you can charge the tenant for returning the property to the condition it would have been in had the tenant not breached the tenancy agreement. So I'm going to use stuffing nappies down a toilet as an example. Should a tenant stuff nappies down the toilet? Firstly, you have to factor in that the landlord has to ensure the property is fit for human habitation under the New Homes Act that came into force a few weeks ago, but also Section 11 of the Landlord and Tenant Act 1985. So if tenant blocks toilet with nappies, firstly, the landlord does have to return it and fix the problem. So it does need to be fixed, otherwise you're in breach of other laws. But what you can do then is bill the tenant immediately. So effectively bill the tenant for the contractor call out to come and fix it. If the tenant refuses, you can either take them to court there and then through the small claims court, or you can take them to court after the tenancy is ended, or, which is probably the most likely, you can deduct it from their deposit at the end of the tenancy. Now, what I would say is you can only deduct it from the deposit at the end of the tenancy, provided that the tenancy agreement allows you to do so. So you have a clause in it that says the tenant will indemnify the landlord against damage caused by themselves during the tenancy. Slightly better and more legal version of that, but also, and this is the most important one, you must make sure that the deposit clause in your tenancy agreement allows deductions for damages. So make sure that you've got the tenant will indemnify the landlord for the various breaches, blocking toilets, etc., but also that the deposit clause allows you to deduct those damages from the deposit. That's particularly important because if the deposit clause doesn't allow it and it goes to a dispute, the schemes won't award the money for that. So make sure you've got it effectively twice. For those Property Mark members, we've already updated our AST. One, I would recommend you use it, but if you don't want to use it, at least download it. It is free for members and it's got those clauses in there.
Great. Okay, super. Thank you. A couple of other questions again around this what's in, what's out question. One from Simon Gressel at Finlay Brewer. If he's got customers who who want help finding somewhere to move to or find somewhere to live, can he charge them a property finding fee?
So I think what he's talking about is a kind of the relocation agent situation, where they're finding a property for a tenant.
Yeah,
that is acceptable, and you can charge a tenant a fee for finding them a property, with one caveat: you can't show them any of your properties. So you can charge the tenant for finding them a property with a different landlord or agent, but if you are the agent of the property that the tenant chooses, you can't charge them a finder's fee. So effectively, yes, but don't show them any of your own properties, otherwise you'll be in breach of the law. Okay,
and actually related, but arguably even more cunning, question from Simon Seabag, Phil Spector. Can tenants volunteer to pay application fees to obtain priority status for a property after the 1st of June?
No.
Okay.
Just no.
No, fine. Okay. Okay, great. And regarding early termination, David, a question from Charlotte Dyer at Regal Estates around the surrender of tenancy. Can we charge the fees the LLD would have for reletting if a tenant wants to break the tenancy early? This wasn't clear on our last webinar. She's just asking for clarification.
Sorry, William, would you mind asking that question again, please?
Sorry, yeah. So this is a question regarding surrender of tenancy. Can we charge the fees the LLD would have for reletting if a tenant wants to break their tenancy early? This was unknown still last webinar.
Yeah, I understand that. Sorry. So Yes, I understand why this one's come back up, because at the last webinar we hadn't had the guidance come out, so I wasn't quite sure what the answer was at that moment in time. We have now had the guidance come out, and what the guidance says is that yes, you will be able to charge an early surrender fee. That fee cannot be more than the total rent outstanding on the property, but it should be reasonable. So what the government has suggested is that agents will be able to charge the landlord's costs in reletting the property plus the rent until the new tenant moves in. And that's actually what we've put on our standard template, our fees template. So thinking about that in practice, the vast majority of agents have some form of landlord setup fee for setting up the tenancy. Yeah. So what I would suggest, and if you don't have one, I would suggest you put one in now, that whatever that fee is for the landlord, we will charge you £200, £300 to set up the tenancy. That is the charge that you put on to the tenant as the landlord's costs in reletting, for two reasons. One, it's nice, simple and transparent, because that fee will have to be on your landlord fee schedule. So all they need to do is look on the wall and there it is. But also it makes it very transparent, very clear. So you charge that fee plus all the rent until the new tenant moves in. And I think that will be classed as fair and reasonable. And what you put on your tenant fee schedule is early surrender, the landlord's costs in reletting, please see landlord fee schedule, plus all rent outstanding on the property until the tenant moves in, up to a maximum of the total rent outstanding on the property. And again, even if you don't use our fee templates, look at it, because we've got the set of wording on there.
Yeah, very helpful. And actually, talking of fee schedules, and just last one from this section, David, Michelle Law from Chamberlain's just said, where can we find the final definitive list of fees we can charge tenants and the caps?
Well, one, you can find it in the Act itself.
Right.
You can also find it in the guidance. If you are an ARLA member, you can find it in our fact sheets that you can download from the fact sheet section, or download the tenant fees toolkit. But I've outlined earlier what those are, and I can go through the caps on them if that would help quickly.
I think it would actually, yeah.
So obviously rent is rent. Don't need to worry, you can charge whatever you want in rent. Similarly, utilities are utilities. Holding deposits. Holding deposits are capped at 1 week's rent. And to work out these weeks, by the way, it is month times 12 divided by 52. And that is what will get you the 1 week holding deposit. The security deposit, you then multiply the holding deposit by 5 or 6 to get the 5 or 6 week security deposit. Novation, variation, assignment of contract, the change of sharer, or the requests, that is capped at £50, including VAT, or your reasonable costs if higher. If you charge more than the £50, you have to be able to prove it. So really the only situation that I can think where you'll be able to charge more than £50, because you can't charge for your time, is a change of sharer where you need to do an inventory. But what you won't be able to do is do £50 plus the cost of the inventory. What you will only be, you will have to charge the referencing cost that you've been charged by your provider plus the inventory cost. If that comes to more than £50, you can charge it. If you can't, you can't charge it. What I would say, particularly for this one, is because you're not allowed to charge for your time, in a situation like this, I wouldn't recommend that the agency does an inventory. You get an external inventory clerk who then sends you a bill so that you can then prove to the tenant it has cost you more than £50. I hope that makes sense.
Yep. Very good. Okay, I think I might move on, though. Thank you very much for that. And yes, so there are more details available, starting with the Act, basically, is the key conclusion there. But we've got a lot of questions in general. Sorry, David, go on.
I was just going to say, just before we move on, there's a couple of ones when in the what's in, what's out that I would just highlight to agents. So the two really important ones are contents insurance and tenant liability insurance. Now, if you mandate those as a condition of granting the tenancy, i.e. you have to have content insurance in order to get the tenancy, or you have to have tenant liability insurance, those will become prohibited payments unless the landlord picks up the bill for it. If you say we would strongly recommend you have content insurance, and here are the list of providers that we would recommend and we get a commission from them, that's absolutely fine. But if you mandate it, it becomes a prohibited payment. Okay. So do factor those ones in. Yeah, similarly, utility bills. A lot of properties or agents will say the rent is £500 a month and then 150 for bills. If you do that, although it's not technically, it's not tenant fees ban related, you have to be really careful about the maximum resale provisions set by Ofgem. And if you're making a profit off that £150, you are liable to being classed as a utility provider and have to be Ofgem regulated. So I wouldn't recommend you do that. If you are going to do it inclusive of bills, the rent is, using that example, the rent is £650 including bills, because the legislation says the rent is the rent. If you start adding and bolting things onto the rent, that's when it gets a little bit questionable. So, utility bills is one example. Another example is gardening or cleaning. If you want the tenant to have cleaning every month or every week or every 2 weeks, you want gardening once a month, you can't bolt those on, because those bolt-ons then become prohibited payments. What you can say is, say it costs £100 a month to do the cleaning. The rent is £600 a month, inclusive of cleaning. And then just don't specify what element is cleaning. It's just the rent as a whole includes cleaning, it includes utility bills, it includes that. And you just build it all in one sum rather than multiple sums.
Very good, very clear, thank you. So let's just turn quickly to pets. We've got a lot of questions on pets. Most of them, I think, they're pretty similar to each other. But I mean, the key question here is, say, for example, from Wendy Ellis, Property Explorer, can we charge a higher rent for tenants with pets? Yes. As ideally a premium or something to cover the cleaning?
So yes, absolutely. Firstly, I think Wendy's asking this question because the security deposit cap is an absolute cap of 5 or 6 weeks. You can't charge a pet premium on top. Therefore, probably the way to mitigate it is to charge a higher rent for a property with pets. Now, this comes back to actually the point that I've just made about the cleaning, etc. So what I would suggest is, we'll stick with the £500 a month rent, and you put on Rightmove, Zoopla on the market, rent is £500 a month, and then underneath the rent will be £510, £520 a month if you have a pet, something like that. And that's not a Tenant Fees Act issue. The Tenant Fees Act is silent on what you charge in rent. It is a consumer protection issue. So under the consumer protection regulations, under the consumer protection regulations of 2008, you have to provide all material information in order for a consumer, a tenant in our case, to make an informed transactional decision at the earliest opportunity. And therefore, if you don't put it right up there on the property portal, by the time you get to a viewing and you actually say, oh, well, I know it says 500 a month on Rightmove, but actually it's 520 with Flossie there in the corner, you're already in breach of the CPRs. So for this one, don't necessarily think about Tenant Fees Act compliance, think about CPR compliance.
Okay. Very good, very useful. And then I've got Lee Slingsby from My Property Store asking, he's in problem solving mode really. He's asking, is there anything that a tenant can offer or do for the landlord to consider a pet which still offers protection to the landlord?
I think it's the answer to the same question.
Okay.
Pay more rent. Yeah.
Fine, and so it's pay more rent, but be wary of the consumer protection legislation.
Absolutely.
Yeah, fine, okay. We're very, very clear, thank you. I think I'm going to, in the interest of time, I'm going to move on to the next theme, which is a set of questions we're not going to get again in a year or so's time, but it's those tenancies which are sort of in progress when the regulations come in on the 1st of June. So, in simple terms, for example, Rachel Tor at Whitaker and Biggs asks, what happens to ASTs which are on a rolling contract where the tenants have paid for a checkout report months ago?
Right, so I'll come back to the checkout report in a second,
Okay.
if I may. Just
Yep.
quickly to go through the transitionary provisions, and this is what these are called. All Acts of Parliament come into force on a specific date, and on that date there will be, in our case, millions of tenancies in existence, and therefore the Act of Parliament has to say what happened to those existing tenancies. So first and foremost, the Tenant Fees Ban applies to tenancies entered into on or after the 1st of June 2019. Right. Entered into means signed by both parties and dated. Therefore, something tells me there's going to be a lot of tenancies entered into on Friday, the 31st of May. So for any contract, and I would also add, it doesn't matter when the tenancy starts, it's about when the contract was entered into, when the tenancies were signed and dated. So for existing tenancies, and even for tenancies that haven't actually started but the contracts are signed, you can continue charging fees for a period of 12 months, up to and including the 31st of May 2020. Right. So even things like student tenancies that are starting in September, October, but they're signed now, that's all fine. Continue charging fees up to the 31st of May. Now, if the tenancy renews during that period, you can charge the renewal fee, because that is a fee associated with the existing tenancy, but you can't then charge any further fees because the renewal tenancy is a new tenancy under the law, and therefore fees drop after that because it is a new tenancy entered into after the ban comes into force. If the tenancy drops onto a statutory or contractual periodic after the ban has come into force, that will be viewed for this legislation as a continuation of the existing tenancy, and you will be able to continue charging fees up until the 31st of May 2020. Now, specifically on the checkouts that are taken up front, this is one where agents are going to have to be very, very careful, because if the tenancy renews, the moment you sign that renewal tenancy, that checkout fee that you've already taken automatically becomes a prohibited payment because it's associated with the end of the tenancy, and the tenancy is renewed, therefore it's at the end of the next tenancy. So you will have 28 days from the date you sign that renewal tenancy to give that checkout fee back, otherwise it will become a prohibited payment. Similarly, if the tenancy drops onto a statutory or contractual periodic, you will then have 28 days from the 31st of May 2020 to give that back. So you really do want to think about and make sure you've got in your CRM systems a flag that says this tenancy has a checkout fee that's prepaid, must remember to give it back, otherwise I'm liable for quite substantial penalties. That's fees. Now, can I go on? Is now a good time to go on to deposits, William, and how deposits work during the transition?
Actually, we're going to come on to that in just a second, David. So no, I might say hold that thought for a second.
I asked that because the fees during the transition period and the deposits during the transition period are different. So fees, we've got that 12-month 31st of May 2020 backstop date, doesn't exist with deposits, but I'll come on to that later.
Yeah, it is probably a good time just to remind people what the liabilities are here if they are found in breach.
Indeed. So for first offence, it is a £5,000 fine, and of course you have to return the prohibited payment, and you can't use a Section 21 until you've returned the prohibited payment. So, and do bear in mind, a prohibited payment will be any fees that are charged, but also any holding deposit taken in excess of a week, any security deposit taken in excess of 5 or 6 weeks. So one, you'll have to return that prohibited payment, and you can't use Section 21 until you've returned it. 2, for first offences, a £5,000 fine, and therefore, and 3, for second and subsequent offences over a 5-year period from the first offence, that is a £30,000 fine, or the local authority can choose a criminal prosecution, which is unlimited fine and a banning order. On top of that, what I would say is it's per breach. So take a student HMO with five tenants in it. and you charge each one of those a £300 fee, that's not one £5,000 fine. For your first offence, that will be five £5,000 fines. For your second offence, that will then be five £30,000 fines. Similarly, if that £300 fee was made up of contract negotiation, referencing and inventory, that wouldn't be one offence, that would be three separate offences. So take that 5-bedroom HMO, you're potentially looking at 15 £5,000 fines, and all you'll have taken is 1,500 quid. So it really isn't worth trying to breach the ban.
Right. And just before we move off this section, do you want to just clarify that point out, rolling contracts? How do they fit in here?
So the rolling contracts, if the tenancy is already on a rolling contract, you can continue charging up to the 31st of May 2020. If the tenancy drops onto a rolling contract after the 1st of June this year, again, you can continue charging fees up to the 30th of May 2020. So do make sure you've got a big X on that date in your calendars, that any fees that you are holding for any tenancies have to be repaid within have to be repaid within 28 days of the 31st of May next year.
Yeah, great. I'm going to move on, but just before I do that, I just want to summarize, because we had quite a few questions around students, but and again, David, you can correct me here, but if I'm paraphrasing, the key thing that matters is the date that the contract was entered into. So for example, a question, say, for example, from Emma Dyson at Belvoir, who was concerned about student applications in Cambridge, where she's got it all agreed in May, but the student doesn't start till September, October. The date that matters there for the purposes of the Act is when the tenancy was agreed, which was before the 1st of June, not when the tenancy starts, which is when term starts. So again, I think that applies to all the student questions we've been asked here, but it's very helpful clarity.
As long as you've said, it is entered into, which is both parties signing and dating the contract prior to the 1st of June, you can still charge fees even if the tenancy doesn't start till August, September.
Yeah, great. So now let's get onto the deposits question, David. So for example, so Nikki Bremner asks from McCarthy Holden, what do we legally need to do with deposits of over 5 weeks?
So one, for new tenancies entered into on or after the 1st of June, don't take more than 5 week or 6 week deposit, depending on the annual aggregate rent. So just don't do it. That will automatically become a prohibited payment. For existing tenancies, and this is where the transitionary provisions between fees and deposits differ. So for existing tenancies that renew after the 1st of June, and that's contract signed after the 1st of June, on or after the 1st of June, you will have to refund anything in excess of, God, excuse me.
Somebody just scored.
Sorry. Thought I'd switch that off. So for tenancies that renew on or after the 1st of June, and that's where the contracts are signed on or after the 1st of June, the renewal contract, you'll need to refund anything in excess of 5 or 6 weeks of the new rent. And I think the new rent is quite important, because you're not going to be giving back effectively a week if you've taken a 6 week deposit, because if the new rent has gone up, you'll be holding 5 weeks of the new rent, not 5 weeks of the original rent. So do think about that. There is a deposit calculator already on 2 of the 3 schemes websites. I understand on the 3rd scheme it will be coming shortly, so that you can double check what the right figure is. You will then have to refund anything in excess of that. So I use the example of £100 a week rent and a 6 week deposit taken at the moment. So you'll have taken £600 and protected £600. If you keep the rent at the same £100 a week, once the ban comes in, you will have to refund £100. But if you increase the rent to £120 a week, 5 times £120 is £600. Therefore, you won't have to refund anything. So think of it like that. That's for renewal tenancies, and you will have to refund the money within 28 days of signing the renewal tenancy. For contractual and statutory periodics, you don't need to do anything. So if you let the property, let the tenancy drop onto a statutory or contractual periodic, once the ban comes into force, and for example, you've taken a PET deposit, so you've got an 8-week deposit, you don't need to do anything about that until the tenancy comes to its natural end. So i.e. it's either renewed at some point later down the line, or the tenancy vacates. So something agents might want to think about, particularly where they've got existing tenancies with pets, where they've got a higher PET deposit, you might want to consider leaving a tenancy to drop onto a statutory or contractual periodic, because then you can keep that higher deposit. Or you renew it and put a PET premium onto the rent. That's up to you.
Great. Now, Andrew Maunder from AJ Homes Limited asks, can you confirm on what grounds the initial holding deposit, the 1 week's rent, can be withheld from a prospective tenant?
Certainly. So there are 4 grounds. Yes, 4 grounds that the holding deposit can be withheld. Number 1 is if the tenant pulls out. So if for any reason the tenant pulls out of the tenancy before the contract is signed, the prime example is they take 5 different properties, they put down 5 holding deposits and then decide which one they want. They will lose 4 of those holding deposits. So if the tenant pulls out, you get they forfeit the holding deposit, and it is forfeiting the holding deposit in full. So you can hold it all. You can just give back part of it if you would like, but you can, where the holding deposit is forfeited, it forfeits the whole amount. So number 1, tenant pulls out. Number 2, also relatively simple, the tenant fails a right to rent check. So if the tenant, you're not lawfully as agents or landlords allowed to let a property to somebody that doesn't have the right to live in the United Kingdom, and therefore if they fail that right to rent check, they forfeit their holding deposit. Number 1, number 2. Number 3, if the tenant provides false or misleading information. Now, false or misleading information is not failing referencing. So if they provide completely accurate information but still fail referencing, that will be classed as the landlord or the tenant pulling out, and you'll have to return the holding deposit. However, if they have actively lied, and most importantly, you can prove they have actively lied, you can withhold the holding deposit. Now, the obvious examples of this are, how much do you earn? Oh, I earn £35,000. Do the referencing? Oh, no, you don't. You only earn £25,000. Another one, do you have any county court judgments? No, I have no county court judgments. Oh, yes, you do. You haven't paid utilities on the last property and have got 3 utility county court judgments. You don't need to be able to prove whether the tenant knew it. So if they say, oh, I didn't know I'd got 3 county court judgments, that's irrelevant. It was discussed at length in Parliament, but it was decided that an agent will never be able to prove whether or not a tenant knew they had a county court judgment. If they've said they didn't, but it turns out they did, false or misleading statements. But you must be able to prove the lie. If you can't prove the lie, you can't withhold the whole deposit. And this is where application forms come in. Now, make sure, and this is something that if you haven't done it already, go to your referencing agency and find out exactly what questions they ask as part of their referencing, and then make sure your application form or your reservation form, whatever form you use that you get the tenants to sign, make sure that mirrors the questions exactly, so that you can say, we asked you this question, you said this. The referencing agency found exactly the same same question and got different information, you have lied. Most important one, I would say, that one, and the sort of prime example, is how much do you earn? Now, how much do you earn is a very subjective question. Are you asking basic salary? Are you asking on-target earnings? Are you asking actual earnings? Are you including car allowances, bonuses, other commissions? And therefore, make sure that whatever question the referencing agency is asking, you are asking the same one when it comes to earnings. Because you could say, how much do you earn? Tenant puts down their on-target earnings. The referencing agency then just does it based on basic salary. The tenant hasn't lied. They've just given you different information, but it was still accurate information. You won't be able to withhold it. So make sure, whatever, particularly on the earnings question, what is your referencing agency going to ask? Make sure you ask exactly the same question so that you can then prove it. It's why, as part of our tenant fees toolkit, we haven't been able to put a template application form together, because every referencing agency asks the question slightly differently.
Yeah.
Oh, sorry,
sorry, go on, yeah.
Then, didn't I? Sorry. The final one, so we've done pulls out, fails right to rent check, provides false or misleading information. The final one is where they don't enter the agreement by the deadline. So what the government expects is agents to go from taking the holding deposit to entering the agreement, signing the contract and dating it, within a period of 15 calendar days, what is known as the deadline for agreement. If the tenant isn't getting the information back to them, if the tenant is dragging their feet effectively for whatever reason, and you hit day 15, they forfeit their holding deposit, off you go.
Yeah.
Similarly, though, if it's the landlord or the agent that's not getting the stuff done, not replying to the tenant's phone calls, not replying to tenant emails, and we hit day 15, you have to give the holding deposit back. Okay. So that deadline for agreement is really important. You can extend the deadline for agreement by whatever length of time you so wish, as long as you have mutual consent, i.e. both the landlord and the tenant agree to extend the deadline for agreement. But if you breach that deadline for agreement, you have to give the money back. If the tenant breaches the deadline for agreement, they lose the money.
Great. I think that deals with the question actually from James Sherritt I was about to ask from Harvey Scott. But we've got before I move on from this section, we've got a couple of questions around time wasters. Nicola Bean, for example, at Letting Zone, saying they don't take holding deposits from prospective tenants, but how do you propose she can avoid time wasters? Take
a holding deposit.
Right.
Sorry. And that is, it's designed to stop time wasters. Right. That's what happened in Scotland. In Scotland, they don't have holding deposits, so tenants took 5 or 6 properties off the market, agents did loads of work, and then they selected the property they wanted. In England, if they do that, they will lose most of their holding deposits. Well, they'll lose all bar one holding deposit.
Yeah.
So
and just, sorry, go on.
It's the legislation is there to stop the time wasters.
Yeah.
So you don't do it now.
Fine. And interesting question from Twitter, actually, from Danny Atkins, who says it sounds from what you're saying as if like a tenant could actually damage a property intentionally and the landlord still has to pay for it to be repaired. That doesn't seem fair on landlords. That
isn't changing from the situation as it is now, and okay. Actually as it has been since the Landlord and Tenant Act 1985. What we were worried about with the Tenant Fees Act, and what we were arguing very strongly against, was that the landlord wouldn't be able to recharge those costs to the tenant immediately. Under the early drafts of the Act, it looked, or the bill as it was then, sorry, there was the distinct possibility that landlords would have just had to pay that cost up front. So, you know, going back to my earlier example of the nappies, they'd have to pay to unblock the toilet, but then couldn't actually recover that money from the tenant until the end of the tenancy. Under the damages provisions which are within the Act now, they can. So it actually doesn't change the situation from where it has been since the Landlord and Tenant Act 1985 was introduced.
Yeah, actually, let's just drill in a bit more about landlords. Actually, we've got a few questions like that. So, for example, you know, there's actually quite an emotive question from Hetal Shah here at Haven Property Consultants, just saying, how will this affect the future of local landlords? Because where he's looking at it from, all the local landlords have been put off from buying buy-to-let properties.
Absolutely. I can see exactly where he's coming from. Even the Survey of English Housing this year said that the number of private rented properties had decreased by 200,000 in the last 12 months. And I think that is a combination of increased taxes with the mortgage interest relief and the changes to stamp duty, land tax, as well as the fact that everybody else got a capital gains tax, a capital gains tax cut a couple of years ago, except private landlords. They're layering up the legislation with local licensing schemes, with the tenant fees ban passing additional costs onto landlords. And now that we've got the abolition of Section 21, whilst I don't think it's going to be quite as bad as it has been made out in the press over the last few weeks, it's just something else that's burdening landlords to the point where it's not going to become economically viable to be landlords any longer. And I think the government really needs to appreciate that all of this legislation isn't actually helping anybody, because none of it is at the moment being enforced. It's why we're quite pleased with the lead enforcement authority concept, where we're hoping we will get a bit more prosecution and a level playing field for the professional agents like those that are on the webinar today, who will stop charging fees on the 1st of June. But we all know businesses in our high streets that will continue charging fees. What I would say on that one, we've already established good working relationships with the lead enforcement authority. It's not fair on good agents if bad agents are still charging fees. So shop them to your local trading standards. And if you don't want to shop them to your local trading standards, let us know and we will do it to the lead enforcement authority. So come the 1st of June, if you are aware of agents still charging fees and don't want to take action yourselves, we will do it on your behalf if you email regulation@propertymark.co.uk.
Great, and actually I want to get to enforcement in just a moment, but just before that, I'm going to combine two questions here actually. The Catherine Hawkins from the Property Ombudsman just asking, will landlord fees still need to be displayed after the ban comes into effect? And Mara Anthony from Lyon just asking, any tips on the best way to explain the increase of fees to landlords?
Yes, so yes, the Consumer Rights Act and the fee transparency rules are not going away. In fact, they're getting more onerous. So agents will have to display all fees, charges and penalties levied on both landlords and tenants prominently in their offices and on their websites. In relation to tenant fees, you're actually going to need 2 sets of fee schedules come the 1st of June. One for the new tenancies that are under the ban, because there are still fees you can charge. So there is you are going to still need a fee schedule for post-tenant fee ban fees. You're also going to need a fee schedule for your existing tenancies for the next 12 months. And to make things even more complicated, you're going to need a 3rd fee schedule if you let assured tenancies, because assured tenancies are outside of the ban, but inside of the fee transparency rules. Now, again, if you're ARLA members, our tenant fees toolkit includes 2 copies of fee schedules, one for post-tenant fee ban fees, and another one which we have merged the existing and the assured one. If you're not an ARLA member, you're going to have to create those yourselves. On top of that, you are also going to need to display your tenant fees, so just the new fees, post-tenant fee ban fees, on the portals and any third-party websites that you use to advertise the property. So Facebook, Twitter, LinkedIn, obviously Rightmove, Zoopla on the market, any local property portals. If your local newspaper has a website and you advertise your properties on there, you'll need to put your fees on there as well. That will just be the new fees post 1st of June. But in your office and on your website, you will need new, existing and assured fee templates for tenants.
Yeah, great. Now, I was going to talk about enforcement, but actually I think in the interest of time, I'm going to skip right to the other sort of big question here, which is really lost revenues. As we've got quite a lot of questions on this front, but let's just stick to the big ones. So referencing, for example, can we ask tenants to pay for their own reference or direct tenants, as Michael Davies asks from CJ Hole, to a referencing agency which pays the agent commission?
Absolutely not. That will be completely illegal in all those situations.
Very good. And what is your view on, this is a question from George Cobb at Daniel Cobb, what's your view on referral fees as a source of agent income?
Well, I think there is nothing wrong with referral fees, and that is a great question to bring up at this moment in time. The government has said that it is giving the industry, both sales and letting agents, 12 months to prove the industry can be transparent in referral fees and commissions. If, when it's finished its review in 12 months' time, and actually I say 12 months' time, it's actually 9 months now, the government feel that the industry is not being open and transparent on referral fees, then they are going to ban them. So I don't think there's any problem whatsoever with trying to generate additional or lost income from referral fees and commissions. Just make sure you are transparent that you are receiving those referral fees or commissions with whoever is paying the bill. And whoever is paying the bill is a really important one. So particularly things like utility providers, Spark Energy, I use as an example. The tenant is the one that's paying the bill, not the landlord. So do make sure you are being clear and transparent with the person that's paying the bill. It's not always going to be the landlord.
Yeah.
Just to remind you. But 12 months, if you don't want referral fees to go the same way as tenant fees, the industry has got to prove that it can be transparent.
Yeah. So I'm running out of time here, David. I think I've only got time for one more question, and that is from Phil McGarth at Smooth Moves in Nottingham. How can we legally cover our admin and referencing costs?
You're going to have to effectively either find other ways of generating income, i.e., can you increase the rent in your area so that with the rent going up, your amount of commission going up from the landlord increases in terms of actual pounds, shillings and pence. Do you have to increase your landlord fees? You might also want to consider actually charging the landlord for specific things as well. So if, referencing fees, it comes back to the tenancy setup fee that I was talking about earlier. You've also got to look at ways of reducing costs. As I've said on this webinar, previous Goodlord webinars, I think the one benefit of the tenant fees ban for the industry is the explosion of PropTech that has come in to reduce your admin costs. Yeah. Goodlord is a prime example of that. Be it the admin side, be it the accounting and finance side, there's been an explosion of PropTech that can help reduce your costs. So you've got to look at ways of reducing costs and increasing income, because you're not going to be able to charge the tenants. What I would also say is kind of my parting word. The tenant fees ban has been written in law that everything is banned unless it is specifically a permitted payment. Anybody that tells you if you do this, and this, you'll be able to continue charging fees, they are wrong. Yeah. You are going to end up in excessive amounts of hot water. The enforcement authorities have been told that if somebody is willfully breaching the ban, they are to be prosecuted to the full extent of the law. They've also been told if it was a mistake and they were genuinely trying to help and comply with the law, they should exercise common sense. But if you are trying to find ways around it, I can assure you, I can pretty much quote every word of this act at this moment in time. There are no loopholes. One of the things ARLA has been doing is to try and
David. Thank you very much. But that's terrific. So we've got a lot more to go over actually, but we've run out of time on this webinar. So I just have a couple of additional pointers for people, because as you've mentioned, a lot of work people need to make sure they've done here. They've got to update their contracts. They've got to be mindful of consumer protection. So actually, even their listings on the portals, for example, they need to be checking. If you want more details, we've been hosting a series of roundtables throughout the UK for customers and other parties. In fact, we've got one tomorrow with 2 spaces left. Which if you want more details, that one's in Birmingham, but the details are at goodlord.co/roundtables. I want to just highlight quickly, I mentioned earlier that we've just announced today our platform is 100% ready now. So we've got, after several man-years of development work, we're upgrading our platform as shown on this slide. So we've got all tenant fees and platform fees being removed. Platform will enforce the cap on security deposits. It'll calculate for you the maximum allowable deposit. The renewals feature is compliant and will figure out refunds if applicable. We've updated all our documents. Obviously, those of you using ARLA documents can definitely rest assured. We're introducing a new, I think, industry and potentially world first, actually, a payment method called Goodlord Instant Transfers, which will combine the speed and confidence of card payments with the efficiency of bank transfers. We'll be able to show tenants draft ASTs before taking their holding deposit, and we'll be helping agents gather pre-qualifying information to help them filter applicants and avoid unnecessary referencing expenses. So we'll be ready. Will you? If you want to chat more, we've made it very easy for you to book a call. You can book a call directly online with us at goodlord.co/book a call. Our customers can access a webinar on the 21st of May, led by our one and only Katie Finnegan. But to go over more of these questions and other legislation coming your way, we have another webinar with David on the 12th of September. And that just leaves me to thank David very, very much for tremendous insight on today's session. And I look forward to seeing all of you or hearing all of you on either one of our webinars or with David on the 12th of September. Thanks all for tuning in. Good luck and have a good day.